Siobhan, we just out with the first quarter RMB BER Business Confidence Index, and perhaps not surprising, the index is down again, a few points to 36. All things considered, not a surprise, I think. There's lots to discuss, but we don't have a lot of time, so let's focus just on the highlights. So when I looked at the results, the one thing that certainly stood out for me is how low confidence is in the manufacturing sector. I mean, 17 is really low. It's in deep negative terrain, and you don't often see an index level this low. Typically when there's an economic shock of some sort, global financial crisis, COVID. What is the shock this time around?
The shock this time round is basically a structural shock, mainly comprising load shedding. And, I mean, we've had this for a while.
Sure.
We can go all the way back to 2007, but kind of in the fourth quarter of last year, coming into this year, we've seen not only the stage that we're at in terms of load shedding getting higher, so going from sitting around level 2, 3, but also it has become basically continuous. So we haven't had any non-load shedding days this year at all. So load shedding is probably the primary of those structural shocks, but we also have issues with our rails and our ports, and that's the other shock. It affects, manufacturers' ability to bring in components for their manufacturing. It affects their ability to send out their goods for export. And so, these two shocks are really making life quite difficult for manufacturers. With load shedding, you've got periods where they're going to have downtime for, in terms of production, particularly if they haven't invested in alternative energy solutions. For those that, haven't done that, the investment in energy solutions, they're now looking at doing that. That's increasing their costs. For those that do have, it often means now continuous running, say, of diesel generators, and that is not a cheap expense, and this is going to bring down your confidence. And then for those manufacturers which are in a fairly good space to deal with the load shedding and even feel relatively resilient to the port and rail issues that the country is experiencing, they're also seeing some of their customers and clients having to make the decision between buying from them or having to invest in their own energy solutions, and that and so that's also bringing down on the demand side. So it really is quite a difficult environment for the first quarter of the year.
So a double punch in Eskom and in Transnet, and you see it in the data. It's affecting production levels. It is at the same time increasing the cost of doing business, confidence levels coming down. Many negative moving parts here, sadly. Another big sector that the BER covers is the retail sector. So confidence down again, down to 34, I think, in the first quarter. That's once again in deep negative terrain. And perhaps too, not too big a surprise if you think about what's happening. Load shedding is certainly an issue for retailers as well. It's affecting their trading hours. It's certainly running up their costs. You talk about those diesel generators that must now be run more often. And that's certainly taking its toll. And then another headwind is households and their disposable income, which is coming under pressure. Okay, let's shift gear. Let's talk about the one sector that is seemingly holding its own, and this is building and construction. This is a sector, as you know, that has been in the doldrums for a good 10 years, perhaps even longer, and now signs of life are starting to emerge. Take us through the results, particularly also with regards to what you are spotting geographically. In other words, what is happening in the different provinces when it comes to building and construction?
Well, I think that's exactly what the story is when it comes to construction. There are quite marked differences across different provinces. The Western Cape is seeing a really strong boost in confidence that is continuing. And we think this is linked to semigration. So we are seeing after the pandemic, where people were all forced to work from home, that you are seeing more people moving to the Western Cape and working from home to some great extent, and so investing in new residences there. And with the pickup in demand, and you've got quite low rental availability, there is definitely scope for new residential development. At the same time, Cape Town is based right next to a port, which also means that there is, I think, scope and possibility in building industrial parks and warehouse storage and such like. You also have other businesses, opening or expanding current offices. Then you move across to KwaZulu-Natal. And their story is a little bit different. They continue to do the reconstruction following those really destructive floods that we saw last year. Quite a lot of infrastructure, houses and, residences, businesses were all damaged in those floods. And it doesn't take a quarter to kind of return back. But then you also see, in terms of comments from KZN, and this is probably a bit more of a countrywide impact, is that there are, those builders which are working in energy, solar power, inverters, battery installations for households and businesses are seeing just incredible demand for these energy solutions. So much so that, they can't keep up with what they've been asked, to do. So really very positive in that respect.
Okay. So there's a thin silver lining to load shedding, and the construction and building sector seemingly is benefiting from that. Having said that, we must not forget and dismiss the massive impact that load shedding is having on the economy, the damage that it is causing, and it's certainly a lot of pressure on the government to address this issue sooner rather than later, to the benefit of the whole society.